Dubai has long been seen by the world as a booming city of commerce, but now the Gulf's most modern city is transforming itself to become the global hub for Islamic finance. And with the growing number of petrodollars flowing into the region, curiosity grows for this form of finance. Under Islamic law, interest cannot be charged. In fact, it's strictly prohibited. So just how does an Islamic bank compete for profits without using interest? There are two basic structures of Islamic finance used today. The first is a sale-leaseback type of finance in which a bank buys the house and leases it back to the borrower. When the lease is completely paid, the borrower owns the house. Joint venture financing is more like a partnership, where the bank first owns most of the shares in the partnership. Over time, one partner, the home buyer, buys out the bank and takes ownership of the house. So the bank doesn't make money on interest payments, but the profit rate on such financing is in fact roughly the same. Beyond the Gulf, Islamic banks are prospering. Major hubs in Malaysia, Singapore, and the UK are all seeing demand grow from both Muslim and non-Muslim customers. Islamic finance lawyer Michael McMillan says major banks are starting to realize the amount of liquidity this region represents.
In the case of some Western banks, there's been long involvement. HSBC and Citibank in particular have long been involved in Islamic finance. As a more general statement, in the more recent involvement of quite a number of other banks, Deutsche Bank and ING and others, they have a very large Muslim clientele, roughly, say, 18–20% of their client base. More recently, the bigger banks come in to set up funds. Quite different than providing the financing. They're more an agent or an asset manager in the process. They will create a fund, do quite a number of transactions, place that fund, say, in the Middle East.
According to Moody's Investment Service, the Islamic finance market is expected to reach $1 trillion by 2010. But as banks thrive overseas, some are hoping for similar success here in the U.S. Naveed Siddiqui is chief executive of Zion Finance, a New York-based provider of interest-free mortgages. Siddiqui says the American Muslim market represents big opportunity.
It's an affluent and underserved market in the United States, which makes it a very unique feature. The market is known to be highly educated, well placed in the U.S. fabric as entrepreneurs, businessmen, and professionals.
Siddiqui points to the subprime crisis as an example of where Islamic finance differs with the West.
So what's interesting is that the Islamic institutions with huge pools of liquidity have not been hit by subprime and are still willing investors in the U.S. markets. And that's actually what's driving this ongoing interest by U.S. institutions to tap into this Islamic liquidity.
And as the market keeps growing, so do its challenges. Demand for Islamic finance products is outpacing the number of experts in the field. Plus, recent moves into the market by Western banks have been in part tied to the needs of wealthy Middle East investors. Whatever the outlook, the question remains if interest-free borrowing can have a real influence over a credit-driven West. On the Forbes.com video network, I'm Jaman Assad.